Hey everyone, welcome to our Asset Management Friday segment of the Passive Income Through Multifamily Real Estate podcast. I'm your co-host Kyle Mitchell, also joined by Gary Lipsky. This is a new segment that we recently launched that's focused on educating operators, building better systems, and becoming a best-in-class operator. Since we're also live on Facebook right now, make sure to type in any questions you have in the comments section below. Also, be sure to check out our Facebook group, Passive Income Through Multifamily Real Estate. All right, today on the show, we have Kenny Wolfe. Kenny, how's it going?
Good. How are you guys? Thanks for having me on today.
Thanks. Absolutely. If you can start by telling the listeners a little bit more about yourself and what you currently do.
Yeah, sure. So we started buying multifamily assets about 9 years ago. We're above 4,000 units right now underneath our belt. 5 different states. We sold off our deal in Colorado, so now we're down to Texas, Oklahoma, Louisiana, and Ohio. We're multiple markets in Ohio and Texas. And then about 2 years ago, I bought into an existing property management company as well. So we do that, bring that in-house. It already had the CEO, a lot of the systems in place. So it's great to kind of hit the ground running on that.
Nice. So let's talk about your role as an asset manager. You've got a ton of units to manage. What are 3 things you would tell your younger self about asset managing?
It's harder than you think. It's not this like part-time gig that some of the gurus talk about. But you have to enjoy it, I guess, are the 3 things I'd say. And luckily I do enjoy it. Getting knee deep and all that. It's fun. It's always if we have a problem, it's always a people problem. So it's fixable, whether it's our staff, the residents or our neighbors, something, right? It's always people. So as long as you're a people person, it's a great business to be in.
Nice. So not including your third-party property management company or your own, who are some of the best partners that you have in asset managing?
So I'm fortunate enough to have hired an asset manager about 18 months ago. He joined us right around when we were in the 2,500 unit mark. That's kind of I was not being able to breathe, and so always my gut tells me whenever I can't breathe, I got to hire somebody. So brought on a great asset manager. Interesting enough, his background was mostly construction. I wanted to have that as a tool. I could train someone to asset manage. It's not that hard. It's reading reports and asking the right questions at the right time. But there was a construction piece that he brought that was really interesting to me because not a lot of asset managers have that piece to it.
Nice. And how did you find this person? Because as you're looking to build that team, it's do you go on like Indeed or Craigslist, or you've had a pre-existing relationship with this person?
I did. I had a pre-existing relationship with this guy.
Nice. So tell me the differences about managing a 50 unit versus a 200 unit.
Managing a 50 unit to 200 unit is easier. And the reason is because you're going to spend the same amount of time on an asset management role on a 50 unit as a 200 unit. It's the same weekly call you got to have with the regional manager or the management team. So the 200 unit is going to be easier because if you've got 5 move outs on a 200 unit, you don't really feel it that much. On a 50 unit, that's 10%, right? That's a big drop. So there's that aspect to it too. You get better on-site managers, the bigger properties you get. You can afford a bigger paycheck, so you'll attract better quality talent. It's just list goes on and on for folks to buy a bigger asset. Now that depends though on the market. If you're in Oklahoma City or Dallas or somewhere here in the Midwest or in the Midwest, that's tried and true. But if you're in LA, 50 units, with your rents as high as they are out there, right? You get a higher. You can attract it's probably worth 150 units in Dallas maybe to get the same payroll, right? So it's a little bit different around the country, but for the most part, if you're not on the coast, that's pretty true.
Right. And you're fortunate enough to have an asset manager on staff. What does his day-to-day look like?
Well, he would tell you differently than I would probably, but we've got weekly calls with the regional managers. I definitely attend those still. I like to be hands-on somewhat. It's a lot of kind of running down tasks, reminding the construction guys how many units we need and making sure we're making progress on that. And then also it's, property taxes and insurance, and there's just a whole slew of items to chase down on a property to make sure folks are doing what they're supposed to be doing.
Nice, nice. Tell me about one of your greatest successes as an asset manager.
Man, asset manager, biggest success. I mean, it's really kind of turning around properties. We've bought some, I'm thinking of one in particular, we just sold it in January, but we bought this property back in 2013. It was a D class. No one admits they buy a D class, but it definitely was a D class. I proudly admit it. It had $250,000 worth of foundation issues that we knew of at the time. We ended up finding 14 breaks in the sewer lines on the property, and then replacing a whole bunch of other kind of plumbing as well. But we really turned that into, I'd say, a C plus, B minus asset, and really turned it around. So like we were thanked twice by the Denton PD, Denton Police Department, about cleaning up that area. I know there's some nicer single family homes right around there as well. So we were thanked multiple times by those groups as well. So that was really nice to kind of give back to the community that way, and just give a much better asset for folks to live in a better community.
Nice, nice. Do you have a hardest lesson learned as an asset manager that you want to share with our listeners?
The hardest lesson, fortunately, we haven't lost any money on our deals. So we've been paid to learn our education, which is always nice. We've had a lot of funny stories about animals and things like that, but I'd say the hardest one we probably learned was right there on that same property. So we had foundation issues, right? And so when we went in, this is my second deal I put together on the syndication route, and so I went into it. We knew of the foundation issues. I didn't take into my calculation for that first year, thinking that we had to end up raising the entire building at the same time, which means that your bottom floor has to be completely vacant at the same time. And so we had to raise 4 buildings like that. Each of the 4 buildings had one holdout that would not move early, and I threw money at them and gift cards. I offered to help move the boxes myself. I was like, so it was like really trying to incentivize these guys to move, because otherwise I had to wait till their lease came up for that unit to raise the entire building. So we ended up having to wait. It hurt our cash flow because we had to keep 4 buildings vacant, or at least one building, each of those vacant building on the bottom floor. So we're losing revenue. So it hurt our cash flow position for that year, but ended up learning that if you're going to raise the whole building, make sure you've got a good matrix as to who's moving out when on those leases. So
nice. Good advice. How do you think asset managing is going to change 3 years from now?
3 years from now. Well, so kind of timely, this whole COVID-19 deal we're dealing with right now is, I think we're going to push a lot of our residents online, to online leasing and online applications, online property tours. Rently.com is awesome. They can just show up, swipe a credit card, and go into the unit, show it themselves. There's cameras in the unit, so if they've done any damage, and you've got their credit card information for damages as well. So there's a lot of technology, I think, that's going to come out of this. We were already using it beforehand, but I think this particular incident's kind of pushing more of our residents online and our prospects online. We leased at one of our properties. I'll call it a C plus deal there in Shreveport. We leased 4 leases last week with a complete shutdown of the whole, of Louisiana. Like it's a shelter in place. So, which is pretty awesome. I was amazed they got 4. So it was really good to see that folks are actually using this online application process. Work orders they could always put them in online for us, but now I think we're seeing more and more people being trained on that and how to use that.
Nice, yeah.
So I think it's going to be a lot of that and more.
Absolutely.
Which actually may lead to less on-site staff. I'm sorry, I'm thinking out loud. Sorry, it may lead to less on-site staff, especially if you use a property or a service like Rently.com or something like that. We've got a 126 unit deal in Cleveland, Ohio, where we use Rently.com, and it's 126 units. So typically that means we have an on-site manager there every day. At that property, we get away with, I think, 3.5 or 4 days a week with the on-site manager. The 5th, we don't have one, because these prospects can go, show the unit themselves, Our work orders are online. Our maintenance guys can check that online, so they get notified if they have to run up there and go do it. So it's really kind of kept our payroll down on that asset.
Yeah, wow. Only 4 days a week for a 126 unit property. That's really impressive. Usually you may have one and a half people for that size property typically.
Exactly right. Yeah. So I mean that property is very efficient on that. But it's kind of it's kind of our test batch on that to see if it would really work. So
right. Nice. All right, Kyle, you want to take us home?
Let's do it. All right. We ask everyone this last question. What is your asset management superpower?
Asset management. So it's to remain calm.
Great timing for that,
so we're,
right?
it is. I mean, you've got, especially, I mean, like this next coming week, like everybody in this industry is nervous. I'm, nervous too, to see what rents actually come in without the ability to evict anybody. What's going to happen. I think it's going to vary by property. So I think a lot of folks are having some sleepless nights. I've only woken up once or twice this week. But it's really kind of a matter to keep calm and be a people person as well, be able to connect to the on-site folks as well, and the residents and everybody involved really. So having that, being personable and down to earth enough to actually speak to the maintenance guy and ask them how to change out a toilet because I have no idea, things like that, make those connections.
All right, perfect. Well, thanks, Kenny, for coming on the show and talking to us about asset management. Today, I learned a couple of things. We think technology is going to move us, or we're thinking that this environment is going to move us into more of a technology-driven environment, which I completely agree with. Managing larger properties is actually easier than smaller because of the economies of scale, and it's definitely a people's business. So tell the listeners where they can find out a little bit more about you.
Yeah, sure. So our website is wolfe-investments.com. They can also follow us on Facebook. We've got a YouTube channel, LinkedIn, multiple ways to get in touch with us. But the best way to get on our kind of email list and check out what's going on at Wolfe Investments is to go to our website, hit that big red subscribe button, and you'll be off to the races.
All right, perfect. Everyone that is listening in, thanks for listening. And if you like this episode, please head over to iTunes or Stitcher and give us a like, subscribe, and review, which will help us continue to grow this audience. And we'll talk to you next week. Hey, everyone. Thanks again for tuning in. We really appreciate your support. If you're interested in learning more about APT Capital Group and speaking to someone on our team, click on the link and schedule a call with us. We're here to help, and we'd be excited to speak with you and get to know more about you and your goals. Talk to you soon.